Good afternoon, everybody. My name is Peter Matza. I'm the Speakers Chair at the Association of Corporate Treasurers, and it's my pleasure to be hosting the first afternoon session of International Treasury Week. I have a stellar lineup of corporate treasurers from across the world. I have Sharon Wang, Director of Group Treasury of Alibaba Group, Richard Moore, the Treasurer of Caterpillar, Matthew Hurn, CFO of Alternative Investments at Mubadala, Andrea Sotoriva, Group Treasurer of Sitter, and Joseph Braunhofer, Head of Treasury from Smith and Nephew. They will introduce themselves when they make their first comments, but you will, of course, through the app, be able to look up their bios at any time. I should also remind you that we will be doing some live polling during this session and indeed over the next 3 days, the sessions. And also you can, using your app, contact me, the moderator, with your questions if you'd like them answered by the panel at an appropriate time during the discussion. We have a poll to start us off today, which should be appearing on your app. And I should be grateful if you would kindly go to the app and complete the poll. This will give us a start for our conversation this afternoon. It takes a little while, of course, technology being what it is, for us to see the results of that poll and then be able to comment on it. I should also remind you that the International Treasury Week does continue for the rest of today and through to and including Thursday of this week. And there is a range of sessions on a whole variety of corporate treasury topics, including but not limited to funding, LIBOR, the release of the ACT's Business of Treasury 2020 research. We're going to hear from Mark Carney, former Governor of the Bank of England, talking about sustainability finance, and a range of other sessions, which will be moderated both by my colleagues from the ACT and other moderators. I can see some of the answers coming through on the app now. And just so that for those of you who have not yet gone through to the app, the question was, how would you say your Treasury team has responded to the crisis? We have been an integral part of our strategic corporate response. We have been involved in most corporate initiatives. We have been involved in the major finance issues, and we have supported a range of Treasury initiatives. They're not exclusive, of course, but the way the results are panning out just at the moment would suggest that nearly 40% of you are saying you've been an integral part of the strategic response. Around 15% have been involved in most corporate initiatives. 26% or so have been involved in the major finance issues, and around about 22% have supported a range of Treasury initiatives. What this quite clearly shows is the value of Treasury in moments of crisis that we've been enduring. I'd like to start off my conversation with my Treasury colleagues, asking them in turn how they would respond to that particular question. So how would you say, colleagues, that your Treasury team has responded to the crisis? Joseph, perhaps I can begin with yourself.
Sure, and Joseph Braunhofer here, Head of Treasury at Smith and Nephew PLC. As a brief introduction, so I think we've, I'd probably respond with answer one there. So we have been, a vital part in all the kind of the strategic decision making that's been ongoing. What I would say is that the key challenge that we'll face over the next 6 to 12 months, I think initially focus around kind of liquidity risk and managing that risk. So obviously being involved in the forecast and reforecasting that no doubt every business is doing, and also kind of planning for scenarios that we're not entirely sure how revenues will pan out for the rest of this year. A lot depends on the progress that each individual country makes, and we operate in over 100 countries around the world. So there are a lot of uncertain unknowns, and effectively we are planning for every eventuality, and that makes us a key part of those strategic decisions that we'll be making as we go through the rest of the year. So I'd have answered with one, like the majority, I think, of responders.
That's a good start for us, Joseph. Just a quick follow-up question, if I may.
Sure.
Would you say that the majority of your work has been, if you like, in what you'd expect as traditional corporate treasury, so the risk management areas, the cash forecasting, liquidity, funding areas, or has the organization as a whole thrown away the old script and said, how do we go from a blank sheet of paper?
No, we haven't completely thrown away the old script, so I don't think we're in that place, fortunately, which is good. I think in other circumstances, other corporates may have done that or may have had to do that. So I think we're still, we're still trying to, manage within the script that we previously had, which was, fairly robust, and we think that's serving us well. There's additional work on top, but I think we're not starting from scratch. I think we're in a fairly good position as we come into this crisis.
Thank you very much, Joseph. Just to complete on the poll, the numbers seem to have settled now. Around 43% of you have said we've been an integral part of the corporate response. Around about 10% now settled that we've been involved in most corporate initiatives. We've been involved in the major finance issues, say just under 30%, and we've supported a range of treasury initiatives around about 16%. Very clear answers from all of you that you've been heavily involved in your corporate response. Richard, from Caterpillar's perspective, I know you were telling us in a prior conversation that Caterpillar has experience of fairly substantive swings, boom and bust cycles even, perhaps I think you called it. Perhaps you'd give us a little bit of a view on that and whether or not what you're dealing with now is different to that or not.
Yes, hi, this is Rich Moore, Corporate Treasurer at Caterpillar. Fortunately or unfortunately, depending on how you look at it, we've gotten fairly good at managing through cycles and various types of crises over the years. I've been with Caterpillar for 33 years, and this is my 7th cycle that I've been managing through in and out of the treasury and finance function. So again, we're in a very cyclical businesses. Very sensitive to commodity prices and global economic growth around the globe. So again, as we all know, there's been a lot of economic challenges over the past 10 years, let's say, and this is another one that we're having to face. So I think the thing that we have found that has been helpful and again has allowed us to get fairly good at this, although I don't ever think you're good enough at this, is to have a robust contingency plan and an executable plan, a playbook, if you will, entail a lot of scenario planning and having an experienced team. I think is also very important. This is not a time when you want your treasury, your funding team and your treasury group to have never issued a corporate bond before, or have never negotiated a credit facility before, or have never been through currency hedging strategies before. So you having a very experienced team that has been through this before as well, and having an executable playbook that you can quickly get board approvals if you need to, get legal and accounting documents ready to go for any kind of actions that you might need to take. Those are all things that we've learned over the years. It's better to have all that ahead of time and be ready to go than it is to be trying to scramble in the face of a crisis.
One of the most interesting statistics I saw recently was that in the quarter ending December 2019, US Fortune 500 companies had around $2.6 trillion in cash and short-term securities. That figure's been building substantially since the 2008 financial crisis. Would it be your sense, you think, that Fortune 500 colleagues of yours in corporate treasury positions have used that as their buffer to start with before they've gone to some of the other mechanisms? And is that a matter of luck, do you think, or judgment?
Well, we've all seen the statistics on how many companies have drawn on the revolving credit facilities. And I think generally speaking, it probably varies significantly across the industries. My light just went off in my office, but hopefully you can still see me. I'll get that in a second. But you know, I think a lot of companies did start the year as we
can, Richard, although we're losing your voice, I'm afraid, for the moment.
Okay, I'll try to get a little bit closer to the computer. Is that any better?
Thank you.
Okay, sorry about that. So yeah, you know, a lot of companies started the year in very different, many different liquidity positions. We had a very strong liquidity profile coming into the year with about $8 billion of cash on our balance sheet and $10.5 billion of an undrawn credit facility. And so we felt pretty comfortable. Having said that, we put in an incremental supplemental credit facility in the first part of April. It was issued $2 billion of term debt that we're holding the cash on the balance sheet. So we have somewhere around $20 billion of cash and liquidity. And again, this is something that we feel very comfortable with that level. But again, we don't know what the future is going to hold. And it's board and our executive officers preferred that we had, you know, plenty of liquidity to face any potential downturn, as well as continuing to invest in our long-term, medium-term, and long-term strategic initiatives and in this type of environment as well, so that we come out of this on the other side in a much stronger position than we were before.
Thank you, Richard. Sharon, from the perspective of Alibaba, I'm fairly certain your experience is rather, and has been rather different through the majority of the period of this crisis. What would be your initial thoughts?
So if you ask me, my answer will definitely go for the first one. I would say we have been an integral part of a strategic corporate response. So why did I say that? Usually, you know, when the crisis happened, usually the treasury responsibility will be ensure the liquidity, you know, across the globe to make sure everything goes on. But in our case, you know, even said liquidity is at the heart of crisis, but luckily Alibaba Group has a strong heart, so liquidity is not our key concern. But having said that, we do see our values, you know, in the crisis. We have two major challenges, which maybe most of us experienced. Number one will be the managed operation continuity. Number two will be protect the firm from risk, as just mentioned by previous speakers. But we also have two unique challenges as well, which require special support from Treasury during the pandemic. You guys may read from the news. Number one is the group has intention to help small, medium-sized enterprise in China affected by the coronavirus outbreak. So we provide some support to them, such as financial support. So that requires cooperation from Treasury. Number two, we have announced globally we want to, you know, donate the medical supplies to the countries where it is needed. That means we have to ensure procurement of such medical supplies across the globe. That means the Treasury team has to pave the funding route and the liquidity and also the payment route for all the procurements. That means Treasury cannot just stay away from all these challenges in the pandemic. That's why I'm saying my answer will go for the first one.
Okay, that's very helpful. More broadly, perhaps I'll ask you as well as much as I asked Richard. Do you think your peer group of treasurers in major corporates in China will have had those similar thoughts, or do you think there'll have been a much more mixed response?
I think depends. If the company's cash rate, usually the answer will be, you know, not that needed by the corporate from the Treasury part. But if cash, you know, deficit, definitely Treasury will be the number one to figure out where can I guarantee the liquidity for the company. And regarding to the rest too, like risk management, because the volatility in the market, and if you have big operation globally, you definitely can consider the market risk. That's why I think the answer will be between the first one and the third one. That's my guess.
Thank you very much, Sharon. Matthew, if I can come to you in a slightly different context. You're sitting in the Middle East, in the UAE, in Abu Dhabi. You've got an investment portfolio that you're looking after. You've got an economy that's hydrocarbon based, and that's had its own particular challenges. How do you think you and the Treasury team and the Treasury teams plural, perhaps across the region, have responded in this crisis?
Yes, thanks, Peter. Salam alaikum, everybody, and happy Ramadan, Ramadan Kareem for anyone who's celebrating during this holy month. So, as Mubadala, as a global investment company in excess of sort of $225 billion, we cover all industries, all geographies. And so I think from a Treasury perspective, what's been really important is the operational stability. Obviously, from day one, we had to start working remotely. The teams did a great job, and therefore, I guess the digital strategy for all the treasuries probably came into effect before effectively being tested to the full extent. I would say, though, based on the poll, I would be surprised with people who didn't vote for option one for the integral part. And I think I've been saying this now for a while. I think, fortunately or unfortunately, as a profession, we have been front and center now for more black swan type events over the last 5 to 10 years than probably anybody else. And therefore, any treasurer who's not yet become very familiar with their CFO, CEO, or even chairman, I think has probably missed an opportunity to demonstrate the true value that a treasurer and a treasurer team can bring to an organization during such uncertain times. I think we're looking now at various macro themes on the economic impact, and we don't know what's going to be. Actually, we're testing multiple scenarios, and the risk with that, to a certain extent, is analysis paralysis. Everyone's running various sets of assumptions on what may happen, but nobody really knows, and therefore you start questioning, well, what set of assumptions are you really working towards? I think some of the biggest challenges organizations are having right now, though, is probably with the Treasury and the Investor Relations team. Because what you're seeing is many organizations drawing down on revolving credit facilities, actively going to the debt markets because interest rates are so low and there still seems to be a glut of liquidity. But is that going to be the consequence of equity investors? And therefore, I think for a lot of the investor relations or the Treasury teams consulting with their wide range of external stakeholders, including the rating agencies, are going to have some interesting discussions coming up soon that say, well, have you been socially responsible by taking the amount of liquidity out of the system if you didn't need it just because you could? Is it going to be available for those companies that probably would want it, but now maybe can't? And actually, what are you going to do for the equity investors now that are going to look to see a return on that? So I think, it's very interesting as organizations assess the impact on this and also do the social responsibility thing. As an organization, we're looking at every investment, re-underwriting the investment case, trying to determine how much cash is going to be required to support that business, but also making sure we contribute responsibly to all the countries where we have a significant presence by supporting many initiatives and charitable causes to support many people who have been so adversely impacted during this time.
You raised some very good points, and I think in one or two of those cases, we're certainly going to come back to them in a later conversation that we have in this session. Let me just follow up, though, with this question. How do you see the impact on treasuries and corporate finance, perhaps more widely across the region? I know you have a wide knowledge and a wide network of treasurers and colleagues in major corporates in the UAE and across the region. How do you think they would have responded or answered these questions? Those that aren't online, and of course, I'm sure many of them are already listening in.
So I think they're going to respond in a very similar way. I think what I'm sensing when I talk to many of the Treasury community from this part of the world is the uncertainty for those who have not seen it before. So, Rich made a great point. He's been through various cycles. The grey hair certainly helps during this day, so you fall back on prior experiences. I think we start looking at some interesting things going forward. Also, for those involved in the M&A perspective, what impact is 2020 now going to have on the M&A activities of organizations, and how do you value organizations based on 2020 numbers? Do you just extract them? I think many organizations, particularly here, have realized that perhaps the banking systems aren't quite as robust, aren't quite as dynamic, and probably aren't quite as digital as many in the Western world, and therefore that's also having an operational impact. But also you're starting to work through the changing operational processes to ensure things still get done. Payments still need to be made, payroll still needs to happen, but you also need to try to reach out and focus on all aspects of that treasury realm to the touch points. One of the challenges I think we have now is how do you communicate effectively during this downturn situation? Because having positioned Treasury to have a seat at the table with all of our commercial business teams, now how are you really getting that depth of knowledge and experience by engaging frequently? Is what is the impact? What is the cause? How can we help? I think everybody potentially in a Treasury has gone inwards a little bit, operating back in their silo, trying to do the emergency repair patch kit. And I think there's a risk then that you lose track of really what is the external commercial operational issues that you also need to be actively involved in.
All right, thank you very much. You didn't need to have mentioned grey hairs, but we'll move on from that quickly, I think. I just want to thank everybody out there who's submitting questions. I do have them, and I will be pitching one or two of them to the panel quite shortly. But I just want to bring in our last panelist today, Andrea Sotoriva from Cito in Switzerland. Andrea, what would you say your response as a Treasury team has been to the crisis in terms of whether you've been integral in the strategic response or just involved in finance issues? Where would you pitch yourself?
First of all, hi everyone. So I am Andrea Sotoriva. I am the group treasurer for Cita. So first of all, Cita is a multinational which is specialized in providing IT and also network services to the airlines and airports all over the world. So the response of Treasury has been, we have been an integral part of the corporate response to this crisis. But I'd like also to connect to what some of my colleagues mentioned today. So first of all, Cita was founded in 1949 by 7 airlines. And today we have more than 400 members which sit in our board. So our members, which are mainly airlines and airport, today are suffering a lot. So they come to us. We need to take into account that I'm not as lucky as my colleagues. So I am part of a business of an industry which is changing radically. So in the month of April, just to give you an idea, 90% of the flights were canceled. Okay. So our board members came to us and told us, okay, we are changing the whole world. We are not flying anymore. So put in place all your cost containment measures and also start doing some simulation to understand your cash burn. So our response has been very active. So first of all, we have to identify the part of business that we have, which is directly linked to the business of the airlines. Because as I said, our cooperative is composed by airline and airports, but we also sell systems to government, okay, to all the tower of controls that permit the connection between the heart and the planes as well. So today we are serving a sort of a list of customers which do not only belong to the airlines. So we have had to analyze very closely, okay, our business model and understand how this huge impact affect our results, starting from revenues, moving to margins, and then cash flow. For us, I mean, the COVID-19 is a sort of a crisis that never took place before. So just to give you an idea, it's a sort of a combination of the crisis of 2008 plus the 2011 terrorist attacks multiplied by 4. So today, nobody knows what the future holds for the airline business. There are a lot of assumptions that are being made, including, keeping the seat in the middle free, which would kill the vast majority of our airlines. So the business model will have to change completely. So we are in a period where we don't know what is going to happen really tomorrow, but for sure we know the future will be completely different.
Thanks very much, Andrea. We share your pain, by the way. I think you're amongst friends here. That's certainly true. I want to pick up on a couple of questions that have come through, and I'll start with you, actually, because I think they're as relevant to you as any of the others. The first question would be, what was the very first thing you did the question says on day one of the crisis? The second question then slightly varies that and says, as global businesses, how did you cope with the fact that your business was impacted on different dates at different times and different ways because of the spread of the virus? Two sides of the same coin, I think, that question.
Okay, yes. Okay, first of all, from Treasury point of view, okay, this is clearly a liquidity crisis. So we have to handle the liquidity. So first of all, I started to review all my financing, and I started to review all our committed and drawn facilities, and also analyzing alternative ways of finance SITA. But at the same time, we started to analyze our cash trap, because we have presence in 180 countries in the world, and it is very important to keep your cash immediately available. And so this is an area of focus that where we're paying a lot of attention today. So this is the first reaction. Then for what concerns the second question about the responses, well, we have seen the first country impacted was, of course, China, which is now the first to restart basically business as usual, okay? So we have some variances in how to respond to this crisis across the world. The issue is that in order for the whole business to resume, we need all the customs to reopen. So today we have seen some internal flights taking place in China, but in our scenarios for the future, we are taking into account that first we will have domestic flights resuming, and then international flights and long flights will resume only later in time, probably next year or even in the following 2-3 years. So this is the impact all across the world and also in timing for SITA.
All right, thank you very much, Andrea. Joseph, perhaps I could put the questions, that double-sided question to you. What would have been the first thing that you would have addressed? But bearing in mind that, as another global business, clearly you were seeing impacts and circumstances happening at different times in different places. How, as a treasury, did you feel that you responded to that?
Yeah, and again, similar to Andrea, China was the first place where we felt the impact. Obviously, that's the first place where the impact was felt globally, and China's a substantial proportion of our revenue. So I think that was where we first started to get a feel for how this could impact the rest of the group. Liaising with the teams there. We've got manufacturing sites as well as a marketing operation there. So managing that initial risk. I mean, unfortunately, we had surplus cash in China, which is probably a position that a number of companies are probably in. So that helped us through that. It's also kind of helped us see, the path or the trajectory that our revenues might take in other countries who are a little bit further along the curve. So I think in terms of timing, China was the first place we looked at, just supporting the business there, supporting their, initially they were out of the office and supporting their home working and supporting any kind of liquidity challenges they had. Fortunately, they weren't too severe. And, then we came to, we were looking at we've got fairly robust reporting around all our liquidity. So we started to revisit, and I suppose this was just for our own peace of mind. We were comfortable with the financing that we had, but we wanted to just I suppose reconfirm, because some of our facilities were signed a number of years ago, where we stood with certain clauses that were in those facilities, and just make sure that we understood them 100%. And I suppose at the same time we were again starting that kind of reforecasting and forecasting process that seems to be kind of now a bi-weekly or weekly to bi-weekly cycle. So I think, but a key part was also just revisiting those facilities and just reaffirming our understanding, having a few discussions with lawyers externally, internally, and making sure that we understand our position 100%.
Did you make any assumptions that because what you saw, or that what you saw in country X in terms of the way it was affecting society and the way it was affecting business would necessarily be reflected in country Y or country Z? Or did you go, if you like, country by country or region by region?
I think we've been kind of region by region. I think we can. It's a little bit easier with Smith and Nephew in a sense. 50% of our revenues are US. You could say 20% is Europe, and just under 10 is China. So if you took those three chunks, that would cover a large proportion of the world. And so and obviously the US is key. So we've been able to look at them in isolation and not kind of make assumptions across them.
Okay. Rich, if I can pick up with you, then the same sort of double-sided question. What do you think, if you cast your mind back, what was the first thing that went through your mind when someone said, this is real, it's happening? But equally, as a global business, did you have a number of those days?
Yeah, it's a good question, and thinking back on it now, it seems like it was about 6 months ago, but really it was just. But the first thing that we did, really, when we realized this was going to be impacting us globally, is that we got our teams organized. We wanted to make sure that everyone was safe, that everyone was able to work from home as we move to a global. I would say work from home environment. And so that was the first thing that we did, was just make sure we were organized. We knew where everyone was going to be and working from. And then we had really went into our contingency planning mode, where we had teams that were assigned. Again, these are global teams. So some of the meetings and conference calls and video calls were done at all hours of the day and night. Really to get organized around several key areas. One was evaluating liquidity and working closely with various forecasting groups on cash flow scenarios. We had our global cash management team put in place to evaluate our cash investments and looking at how to roll down investments to make sure that cash was more readily available. We had a team that was assembled within Treasury that connected with our receivables and customer marketing sales groups to make sure that we knew what some of the likely impacts were going to be from customers possibly delaying payments to us. We had a team that was assembled in our supplier finance group, working with our procurement teams to make sure that we had a good assessment of our supply chain and making sure that any suppliers that were in need of cash, we may get requests to pay them early or to work with our banks to provide liquidity to our suppliers. So there was I would say several teams that were assembled very early on to make sure that we had the right eyes on aspects of our business. That was really the first thing that we did, was just teams organized and make sure that we were covering all the right relevant areas that we knew we were going to have to work on.
I just want to pick up, move forward slightly here. One of the second major point we were going to talk about during this session was the response of treasurers, both practically, and I think you've dealt with some of those issues there as Joseph has, but also, if you like, emotionally or socially. You're working in a global business, you have friends and colleagues in the business spread around not only your own territory, but elsewhere in the world. You mentioned their phone calls at odd hours of the day and night because of the time zone issues, and clearly the impact that would be on some of the financing structures that you have and the financial institutions and so on you're dealing with, which we'll come to in a little bit. Well, how do you feel that emotionally, that as treasurers, that as business people, as individuals, as friends and colleagues, you've dealt with what has been thrown at you?
Yeah, I think it seems like the response has been surprisingly favorable and positive. I think everyone in our treasury organization has a little bit of a different experience. Certainly, if you're working from home and you have 4 children under the age of 10, it's a lot different experience than if your kids are all out of the house and in college or whatever. So I think that impacts things a lot. So I think flexibility and understanding and making sure that you take all those things into consideration for everyone's situation is important. But I would say my experience has been that with the technology, if this situation happened 15 years ago, I think we'd be in a lot different situation with connectivity teams. but through phone and laptop, Zoom and Teams and all the different. I've learned more about different platforms of connectivity than I have ever, and they all have their pros and their cons, but they all seem to work well. And I think it's the connectivity and staying in touch is really important. Even if it's just a quick chat message with some of your lower level team members, just asking them how they're doing and making sure that you stay connected and plugged in and engaged with everyone, because you can feel isolated if you don't have the daily interaction with your team members in the office. So it takes a little bit more effort from leaders to make sure that their team is being thought of. And so spend a lot of time on very short calls and very short interactions with a lot of the team members just to check in. But I would say overall our experience has been pretty favorable with the technology and everyone's emotional, I would say, situation of dealing with this through this crisis.
That's very helpful. Thank you very much. Sharon, maybe if I can turn to you and ask you the same question, looking at it from your perspective, the immediacy of the issue was there before perhaps it reached other parts of the globe, to the extent that the way you've described your business, it's had perhaps a lesser impact in some ways. But looking at it from the point of view of the individuals you're working with, how well do you think they have responded?
Well, actually, I think our team responded very well. Number one is because actually the pandemic got spread before Chinese New Year. So it actually gave us, the incident management team, a week to prepare for the resilience plan. That's number one. Number two, during the Chinese New Year, we ensure all employees are safe and at home. And we try to make sure the working from home arrangement can work for every one of us. So our IT guys actually have bad time during Chinese New Year to make sure the appropriate license for use, the infrastructure is workable, everything's like that. But for the rest of teammates, they're doing fine. They were doing fine because right after Chinese New Year, we kind of like get back to work in a new normal, like working from home. The good thing is we have our own instant we call office application, DingTalk. So we use DingTalk like hell before the pandemic, as usual, like all the files, all the meetings can be conducted from DingTalk, and then nothing is different after the crisis. And at the same time, we have very robust and well-tested, flexible contingency plan. We actually plan for plan B and C and D, just in case something worse happens. And actually, we also reach out to our counterparties like banks, like service provider, to make sure they can still maintain their service to the minimum needed. And the third part we did is we have a very effective communication channel from the top management to everyone in the organization. We have our own health check-in program online, and managers or the manager will give the encouragement, clear that message to everyone in the company. We are dealing with uncertainty, but we are doing fine. We have cash, we have good system, and our technology went online years ago, and even mobile now. So we can do everything from anything you can touch, like cell phone, tablet, laptop, PC. So from this point of view, I think we are quite lucky. And also the crisis in China went up I cannot say went off, maybe less serious compared to the rest of the world very soon. So we resumed back to office in late February. So it's quite okay for us to maintain the uncertainties. So that's why I'm saying we were lucky, compared to the rest of the world. And I wish that everything can be back to normal for every one of us globally.
Well, that's a very generous message. Thank you very much. Just to pursue that just one moment further, you mentioned their senior management as well. And obviously we talked about the response that you said you would have been part of the strategic corporate response within the organization. Do you think that has changed the nature of the relationship between your corporate treasury and your peer group in management and certainly internally? I'm not talking here about externally. We might come to that a little bit later. But certainly internally, do you think that's changed?
Yeah, definitely. I think after the crisis, we've been working more closely with our counterparties, than before, and we are more needed than before. In the past, we kind of invisible hands, just get things done, like in the invisible corner, as if nothing goes wrong, this will be our merits or credit. But nowadays, we are actively needed by business partners to seek for advice in different countries. So yeah, I think my answer is yes, we are more needed than before.
Matthew, if I can come back to you, you mentioned earlier about the relationships, if you like, between corporate treasury and internal management, peer group, executive management, C-suite, however you want to define it. Do you think, or what would you say to corporate treasurers saying they're struggling with that relationship because of the nature of the crisis and the dislocation that we've got and so on? What clear thinking do you think treasurers ought to be bringing to the party?
So first and foremost, I think it's just a calm mind. So when this pandemic spread, from the tone from the top with the Mubadala, and all the executive team use it, that we're not going to panic. There is no need to panic, and we want to make sure that we're focusing on people. For many people, this is the first time they've encountered something like this. You got that sense of adrenaline that everyone was first fired up on. Then, as a consequence of that, you can sense it now, levels of anxiety picking up, a little bit of fatigue. We're now May time, people haven't had their holiday. Some of us, particularly in this part of the world, are not in our home countries with friends and family. So we're trying to really pull on the personal connections. We're trying to show and demonstrate a lot more empathy and lead from the top. And I think what we're trying to do now is effectively look at the way we communicate. We communicate succinctly, we communicate with understanding and compassion, and we communicate on a results-driven basis. Obviously, there are problems out there, and we really can try and solve those quickly. But in order to get the right messaging to the right people across the structure, across the other peer groups, the commercial team, and our leadership, we need to understand very clearly what the impact is and articulate that in a way that they understand. And the reason it's really important now is we're all using electronic communications. We don't walk to the kitchenette to get a coffee and able to have these quick 10-second conversations. And it's not always easy to try to schedule 30-minute, 15-minute Zoom conversations. So I think you have to value time commitment differently and ensure that the time you're spending is really focusing on the salient points. And therefore, what are the messages? What are the key indicators that will resonate with your peer group, with the leadership? How do you understand what's troubling them, what they're concerned about? And how do you demonstrate that you're able to solve some of their issues from a treasury perspective by utilizing the toolbox, the skills and experiences that you've learned along the way through your exams and work life?
That may very well work within organizations, perhaps where there's a reasonable or a strong ethos and understanding of what the business is about and who the players are and so on. How do you think, if perhaps that is different when dealing with the outside world, particularly our specific outside world? So financial institutions, regulatory institutions, legal advisors, those types of folks. How do you think, or would you suggest a different approach?
I wouldn't. And one thing I've really found across all of those, and I sit on the boards of regulated financial institutions, and regulators have always been a bit quirky by nature, is actually they are compassionate people as well. This is a personal thing where it's reflected and everyone is feeling the same issue. And I think just the openness and transparency on communication. I think it's okay across all stakeholders to say you don't know, that actually we don't all have the answers at our fingertips, but we have the ability to source those answers if you give us enough time. And therefore, I think the more you can communicate openly and honestly is certainly helping. And we've seen that across with banks because they're going through their own issues. So it's no good shouting and screaming at a bank because their service delivery model is not working. Again, they're doing the best they can. Show some empathy, show some understanding. And we find that actually coming together, we are uniting in a much better way.
Thanks very much for that. I'd like to invite the audience to go back to their app and look at the second poll we're going to be running today. question is, how do you think the new normal will affect your treasury profile? First answer would be, we'll be completely integrated in business and finance strategy. We've heard some of that from our panel already. Secondly, we'll be more involved in business and finance strategy, so perhaps more aspirational. And thirdly, we will still be seen only as a support to the finance function, which is a different position for corporate treasurers and treasuries to be in, may be determined by business size or circumstances and what have you. But I'd be interested to see what the audience response is. While we're waiting for that, Andrea, I'd like to come back to you and pick up on this point about internal versus external. And in particular, from an external point of view, you're faced with a circumstance which is not of your making, of course, and not of your ability to change. You can't cut prices to meet different types of demand. You can't change your business marketing and so on, simply because this becomes a governmental and a social health issue. How do you think your messaging and your internal people management has responded to that?
Okay, so first of all, the internal communication, I think we have put in place some recurring Zoom or virtual coffees or bi-weekly team calls to mitigate the anxiety internally and to keep in touch with the people. So in the end, we are all human beings, which is really fundamental, specifically during period of crisis. I would say the difference between internal and external is that I think we need to understand that we are all playing a game. So, for example, all our banks started to call me to make sure that we would not withdraw from our credit facilities because they wanted to plan, okay, their liquidity from their point of view. I think, coming back to what Matthew also mentioned, if we understand the role that each of us are playing, the game becomes easier. In the sense that I entirely agree that the transparency in communication is really fundamental, specifically during this period of crisis. So if the bank try to understand, really, they understand clearly your situation, you can really leverage on it and make sure that the banks are really your partner. Okay, so of course they started asking us a lot of simulation because I said we are part of an industry which is suffering. So we had to produce a lot of forecast and prepare a lot of presentation for them to understand. But then after we have done it, we started also to put in place alternative ways of financing for SITA as well, which is what we are discussing today. So this is a case, a typical, a concrete example of a game of playing roles that should really lead the two parties into the same direction. And internally as well, the conversation, I would say, you mentioned internal and external. So in my case, for example, my top internal customer is my stakeholder, okay, which most of the times is an airline, which is suffering a lot today. So the reality that they are seeing today, okay, is what they expect from all of us. So for us, the first thing to respond to their concerns was to show that we are resistant. So we can go through this difficult period handling the liquidity because the drop in the passengers all over the world doesn't impact us one-on-one. But then at the same time, they started asking us, so what are you doing with your bank? So you can see the link between internal and external customers in the end becomes the same. So communication is really key. Transparency and candid feedback to all internal and external customers is critical for me.
Thank you, Andrea. Joseph, I just want to pick this point up again with you. You talked about your big areas of business, 50% in the US, 20% Europe, 10% China, and so on. Were your external relationships with financial institutions and other advisors and so on, did you differentiate between them? Did you have to give them all the same message? Did you have to deal with them differently because of the new means of communication? What's been your experience?
I think we've always had good relationships with our banks and lenders. So, and we've always tried to keep a consistent message as well. So, and keep kind of consistent and open and honest conversation going. So because we had that strong relationship coming into this, I think keeping that up has been relatively straightforward. We've had various conversations, as you can imagine, kind of week to week, with the banks or lenders, and we still continue to maintain those very kind of strong relationships. People feel that they can just give us a call on the mobile if they've got a question for a credit committee or whatever else they might be doing some internal reporting on how some of their book is performing. So I think having that strong starting position has meant that we've been able to maintain those strong relationships despite the fact that it's been over Zoom, Teams, or just over the phone.
Would you say that you've been comfortable with the ownership of those sorts of issues, both internally, but also externally, so that the one message goes out and is consistent?
Yeah, I think the messaging has always been a key thing to keep consistent as well. So I think we've had a strong kind of leadership, I suppose, from the investor relations team and other teams in terms of crafting that message. And we've all tried to keep to the same script effectively, so that we're not giving one person one bit of information and being inconsistent with someone else.
Okay, thank you, Joseph. I'm just going to ask everybody in a moment or two to think about the next month or 2 months or 3 months and the 2 or 3 practical things that they really want to focus on. Before I do that, I'll just talk through the results of the survey to remind you, how do you think the new normal will affect your treasury profile? Just about 40% have said they'll be completely integrated in business and finance strategy, and somewhere in the region of the mid-50s%, so 56% I've got here, say they'll be more involved in business and finance strategy, and only 5% or so say we will remain only or being seen as a support function. That certainly accords with the recent results over the last 2 or 3 years we've had from our research, the business of treasury. Certainly that the strategic import of corporate treasury and treasurers has increased. I want to pick up, as I say, with everybody then. We've got only 6 or 7 minutes left before the close. So if I go through with everybody, perhaps I'll start with you, Joseph. What are the next couple of months? What are the couple of things you think you're really going to be focused on?
So I think, we started the year in a good position in terms of liquidity. Didn't have any debt maturities this year, but we do have some next year. So I think we'll be working with our lenders just to look at the actions we can take going a little bit further in advance. And I think the other thing that we'll be keeping a keen eye on over the next 1 month, 2 months, 3 months, and even week to week will be the kind of forecasts and performance of our sales teams around the world, and looking at the weekly revenue numbers have become something that's been far more keenly followed than perhaps they previously were, and that will kind of really feed into any further actions that we decide to take. I mean, we're taking actions where we can, where we've got opportunities to now, and we don't have any immediate need to raise any further funds, but we'll be monitoring that situation very closely and making sure that we stay ahead of things, and that we can be as proactive as possible if we do at some point have to approach our lenders.
Thank you very much, Joseph. Rich, what about yourself? The key couple of things you're going to be focused on over the next month, 2, 3 or so?
Yeah, I guess similar to Joseph's response, I think that's a key area, just keeping track of how the business is performing over the next several weeks and months, including a keen eye on working capital. But I think the other thing, just to maybe take a little bit of a pivot on that, is over the next, I don't know exactly when, but over the next several weeks, probably, we're going to have to implement a plan to bring our people back into the office from working from home. And so how does that transition work? How are we going to do it? We're going to do shifts. We're going to do team rotations. So I think thinking through that is going to be important, because again, we all know that in a meeting physically, or if we're all on a video conference, it gives one sense of engagement. If we have half the team in the office, the other half of the team on a video call, it's a completely different dynamic as far as engagement. So just thinking through that and how we're going to make sure that the people in our team can continue being efficient and getting their job done every day, I think is something we'll have to think through over the next several weeks.
Okay, that's very helpful. Thank you very much. Sharon, from your perspective, the next 2-3 months, are you looking just at business as usual, or do you think there'll be a couple of front and center issues to manage? We may unfortunately have lost Sharon. Well, I'll move on anyway. Andrea, yourself, next couple of months, what do you think the 2 or 3 things are going to be front and center for you?
Well, first of all, we'll have to continue to implement new financing tools on top of what we already have. So we have already started the process, which will see us very much involved. At the same time, we'll pay a close attention on the cash repatriation country by country to minimize it. And then I would say working capital management, so minimizing our cash burn will be our top priority.
Okay. And Matthew, rather than comment specifically on the 2 or 3 things front and center, I just want to ask you about the results on the survey. As I said, roughly 40-odd% completely integrated, 55% or so much more involved. We sort of seized the day a little bit after the financial crisis. Is this another carpe diem for the Treasury profession?
If they don't, I think it's another missed opportunity. Again, having been in this industry now for a long time, we have come from the petty cash tin management through to structural integral part of the executive team, focusing on risk management, focusing on scenario planning, and therefore absolutely we do. I go back to what I said earlier. I think we're going to have to start really assessing, were we right in our assumptions? Were these scenarios that we planned for realistic, and did they play out? And did they actually help us make better informed decisions? I think we have to avoid getting caught in the analysis paralysis. I think we need to then really help the organization shape the new normal. I think we aren't going to go back to the way things were, and therefore we need to do that. And the only thing I think from a personal perspective, one thing I'm really going to take away from this is literally self-reflection. And as a business leader who's been doing this for a long time, this has been a unique opportunity, and I encourage everybody just to take that moment of self-reflection to make sure that the way you acted, the way you judge, the way you actually want to improve yourself can actually also have beneficial consequences into the business environment and into other social interactions.
That's a very powerful message, I think, and it's very reasonable. And I think during the rest of International Treasury Week, there's a number of sessions which are going to be looking at how individuals can respond better themselves. I take your point, certainly, of analysis paralysis. I do like that as a phrase anyway, but I do take the point that things are what they are. We have to look back and make some sort of analysis of what we did, how we did it, what that's going to mean for planning in the future. And I do take your point. I think corporate treasury is in a unique position because, to take Andrea's point, you see the real detail immediately day to day. There's no money coming in. There are no planes flying. But you also have to, as Rich says, get used to the fact that this happens from time to time, and therefore there are contingencies that you can put in place. We're coming to the end of our session, I'm afraid to say, because this is a fascinating conversation, and I could certainly sit here and listen to you guys for much more time today. So I do want to thank you individually, Sharon, Director of Group Treasury at Alibaba Group, Rich Moore, Treasurer of Caterpillar, Matthew Hurn, CFO of Alternative Investments at Mubadala, Andrea Sotoriva, Group Treasurer at CETA, and Joseph Braunhofer, Head of Treasury at Smith & Nephew. I want to thank the audience for participating, for putting in your questions. I know we didn't get to all of them. I'm sorry for that. We tried to cover as much ground as we possibly could. Some of what you were interested in will certainly come up during the rest of the week. Please refer to the agenda for the International Treasury Week. There's lots more really detailed content to be digested and to help inform you, some of which will obviously then be available after International Treasury Week. So just with my thanks, my name's Peter Matza, Speakers Chair at the ACT. Thank you to all of you for both participating and for being an audience here today. Thank you all very much, and goodbye.